Your trading toolbox. Hi, it's Charlie giving you Saturday's video and hope you're very well. So I was listening to an interview earlier this week. The World Snooker Championships are on and Ronnie O'Sullivan was being interviewed. And it's funny actually, he was using exactly the same analogies that I use in trading because he was saying that he has effectively a toolbox of various tricks up his sleeve for how he goes and navigates himself through a match. So he said, so I've got hammers, spanners, you name it, wrenches, whatever. He said, and I'll try and pull out the appropriate tool at the appropriate time. So, for example, right, one of his tools might be to play a safety shot rather than go for an aggressive shot and all of that sort of stuff, I guess. And he said, and he's got tools to use for his mindset as well. So what's your trading tools? So I'll talk to you a little bit about mine. So I've always used this same analogy. So when I'm trading the markets, I'll bring the pen up. So when I'm trading the markets, if I'm trading something, let's say this is the S&P here, I'm recording this Friday afternoon. So if I'm wanting to short the S&P, I've got a number of tools at my disposal to go about shorting any one particular market or buying any one particular market. So what I do first of all is I do a top-down approach. So a top-down approach. I do not do mechanical buying and selling based on mechanical setups. Top-down approach. So I have mechanical setups, but then I apply them to the market that I've already analyzed, and I've already got that analysis there. So analysis comes first, so that gives me my overall bias for a market. So my analysis is, well, what's the trend? Is there a trend? Is it a sideways moving market? What doesn't matter what the market is doing. I've got a piece of analysis using multiple time frame analysis. Then it's just a case of pulling out the appropriate tool at the appropriate time, of course, as well. And timing's obviously critical as well. Trying to get the right timing for an entry, okay, relative to wherever the stop loss is being placed. So I might be pulling out a hammer or a wrench. Oh, this is not bad. Not bad there. Or whatever the kit is. So what are my tools, so to speak? Well, if we think about it, there's only so many ways to trade a market. You know, people think there's all sorts of voodoo and stuff going on. You're either, if you're trying to trade on the short side, you're either going to sell breakdowns through prior support, or you're going to sell pullbacks. So that's essentially what you're doing, aren't you? So if a market's going up, for example, you're either going to be a pullback trader and you're going to be buying on retracements, or you're going to let the retracements happen and you're going to be buying on the breakouts when the breakouts happen. And that's just personal choice, really. That's personal choice about how you go about doing that. And if you're a range-based trader, then you're going to be looking at markets to which you're going to be looking for markets which are range-bound. And so a range-bound trader loves to sell tops and buy bottoms within a range, and so and so on and so forth. So all you really need to do is to decide what tools are you going to use if you're looking to buy pullbacks. So if you're coming back to our pullback example, what tools are you going to use for buying pullbacks? Now, it could be, for example, I quite like pullbacks into prior technical levels. So you could be one, technicals. So it could be into an old high. Yeah, technical levels. If I can actually spell. That's a difficulty here on a Friday afternoon. So it could be pulling back into an old high. It could be pulling back into something like an MA, moving average, as you see on my chart. I quite like moving averages. Moving averages are, after all, an average of price. So They are an average of price. So highly, really sought, widely utilized in the technical world, aren't they? And another one which is widely used, probably, would be Fibonacci. So a lot of traders use Fibonacci retracements. Fibonacci. Oh, I'd spelled that wrong, haven't I? It's not two N's. Let's just do one. There we go. Fibonacci retracements, and so on and so forth. So if you're a pullback trader, you've got to say, okay, what type of pullbacks, retracements am I looking for? So I've just said it could be price based only, could be trend lines, of course. So forgot trend lines, TL, and so on and so forth. So it's just a case of you having your personal toolkit and saying, well, what is my spanner? What is my hammer? Well, my spanner might be or is going to be something like a moving average or a trend line or technical levels. So there's 3 out of those 4 that I use. Yours might be different, and that's fine. As I say over and over again, everyone's different. Everyone's going to have a different way and approach of approaching the markets, and we're just talking about one thing here on retracements. And you might have, and I'll have different tools within that. I've been trading today with our traders, and I was trading a retracement, fun enough, this morning, and then this afternoon I traded a breakdown. So there was 2 different tools I've pulled out today based on what the price action was doing. So what's yours? What's your tools that you use? And again, like I said, there is no right or wrong. Everyone's going to be wrong, a good portion of the time, and they're going to be right a portion of the time. And it doesn't matter what your tools are. I think the most important thing is that you are comfortable. And if you're not comfortable, don't work on trying to get to a point where you are comfortable with the tools that you use. The worst thing you can do is hop and become a strategy hopper and hop from one tool to another. Oh, I don't know, Fibonacci, it's not been working for me. Well, try and make it work, because there's plenty of traders around the world who use Fibonacci. It's just a case of it's not always going to work, like anything else. It's not always going to work. So maybe you need to have a look, address your trade management or your risk management and all of that type of stuff. So rather than hop around, try and get comfortable with the tools that you do use. But if you're completely uncertain, then of course you might need to have a look at other stuff. But if you're completely uncertain, but this is what, for most traders, we need to feel that certainty in what we're doing. We know that we're not going to be right 100% of the time, but we still need to have that certainty in that what we are using, we are comfortable with. And if we can get to that point with the tools that we're using, we're comfortable with, then most of the hard work is done for you, because then it just comes back down to following your processes. And if you're following your process, which is all of the tools that we're using, then some of the trades will work, some of the trades won't work. Overall, if you stick to what you're doing and you behave yourself, you'll end up making money. There you go. Nice and simple there on this Saturday. Feedback always welcome, and by all means do give us a thumbs up if you like these videos. It always helps for our YouTube channel. Take care for now. Have a lovely weekend.